About this time last year, everyone was wondering if the world was going to end, and this year in real estate, it feels like the question has changed to when is this run going to end? Single family home values in the US have grown by almost 12% nationally in just the first 7 months of 2021 alone, and according to Green Street's Commercial Property Price Index, commercial real estate isn't far behind residential this year, with pricing across all commercial real estate asset classes growing by over 10% from December 2020 to July 2021. But even though commercial real estate as a whole is on fire right now, there is one specific property type in the CRE space that is continuing to outperform the rest of the market that major private equity firms like Blackstone are doubling down on today. And in this video, what I wanted to do is walk through exactly what that property type is, the latest numbers in the space, why this growth might not slow down anytime soon, and how commercial real estate investors can capitalize on the massive growth that this sector is seeing right now. So last year, when everyone was locked up in their homes, people learned to adapt quickly. And with many stores completely shutting their doors or only offering curbside pickup, online ordering became more popular than ever before, which led to a huge surge in demand in the e-commerce space. And heading into the fall of 2021, even as restrictions have eased in most markets, this trend has continued to stick, with online sales increasing by almost 40% year over year from Q1 2020 to Q1 2021. In 2020, companies that didn't already have a big online presence started to get more involved with the online and delivery markets, and with that came big shifts related to servicing that demand, and in commercial real estate, this has had a huge impact on the industrial sector specifically. More warehouse space was needed for companies to expand their e-commerce presence. More last-mile delivery locations were needed as delivery time expectations continued to decrease, and cold storage space became more in demand than it's ever been before, with food delivery becoming a daily habit for many people during this time. And the result of all of this on the commercial real estate industry has been a massive increase in demand for industrial properties, and with that, supply in the market has just not been able to keep up. And when demand outpaces supply by such a wide margin, that usually means big increases in rents and property values as a result, which is exactly what we've seen in the industrial asset class over the last 12 to 18 months. According to CBRE, over 153 million square feet of industrial space has been absorbed in the US in the first half of 2021, which is the highest mid-year level reported since 2016, and national asking rents grew by 9.8% year over year in Q2 of 2021, which was the highest annual increase on record in almost 20 years. According to CBRE's latest quarterly market report, vacancy for industrial properties was just 4% nationally in Q2, and many markets are seeing vacancy numbers even tighter than this, with metros like the Inland Empire, Central and Northern New Jersey, Orange County, Salt Lake City, and Los Angeles all seeing vacancy rates of less than 2.5% for industrial product in the market. And according to Cushman & Wakefield's industrial Q2 2021 report, almost 37% of new industrial projects are also build-to-suit product, meaning that over 1/3 of ground-up industrial development is pre-leased during construction with a tenant in tow and ready to operate as soon as the project is complete. All of this demand and limited occupancy in major markets has led to massive year-over-year increases in rents across the country, especially in high-growth, densely populated metros, with year-over-year increases in Q2 of 2021 clocking in at 12.2% in Los Angeles, 15.2% in Salt Lake City, 18.9% in Orange County, and a whopping 26% in Central New Jersey. In Q2, construction completions have also fallen lower than in any quarter of 2020 due to high material costs and labor shortages delaying projects, meaning that supply has continued to fall far behind demand in the second quarter of this year. And according to Newmark's second quarter 2021 industrial market report, the development pipeline in these markets probably isn't going to be enough to cool off rent growth even once construction does start picking back up, with a total square footage currently under construction in northern New Jersey at just 2.1% of existing inventory. Just 0.8% of the existing industrial inventory is under construction in Orange County, and just 0.6% of the existing inventory in the market is being built in Los Angeles right now. And with demand increasing so fast and supply just not being able to keep up, this will all likely continue to lead to more significant rent increases for the foreseeable future and value increases in the industrial product type as a result. So with all of that, we know that industrial is on fire right now, but with that said, the question becomes, as real estate investors and investment firms, what does this heated market really mean for the future of this product type, and how can we as investors position ourselves to find value in this market where there just don't seem to be any bargains to be had? Well, to me, the first thing that stands out here as far as where we might be headed in the future is that even though deliveries were extremely low in Q2 of this year, this is likely only a short-term trend. While there are a significant amount of US markets that desperately need new industrial supply to ease upward pressure on rents, there are also other markets across the country that are about to see a huge influx of new industrial completions over the next 12 to 18 months, which is going to represent a significant percentage of their existing industrial inventory, which could actually lead to supply outpacing demand in several cities across the US. For example, according to Cushman & Wakefield, San Antonio has over 8.5 million square feet of industrial space currently under construction, and this represents over 7.2% of their existing industrial inventory. And with San Antonio's industrial vacancy rate sitting at just above the national average at 5.3%, this could mean a short-term uptick in vacancy and a cooling off in rents in markets like this and in other metros where we're starting to see a similar pattern emerge. Markets that are less supply and land constrained are the most likely candidates for overbuilding here, and this is already showing up in the data in several US cities. In Syracuse, New York, industrial space under construction represents 9.5% of their existing inventory. In Austin, Texas, their construction pipeline represents 16.7% of the current industrial inventory in the market. And in Birmingham, Alabama, the industrial pipeline represents almost 20% of the current industrial space that exists in the market. Nationally, the amount of new industrial supply is the highest it's ever been at 410 million square feet currently under construction, according to CBRE, which means that even as much as demand has skyrocketed in many US markets, investors still need to be choosy about which markets they decide to enter in this space, since not all metros are created equal in the supply and demand equation. And on that note, in land-constrained markets where there isn't enough raw land to build enough new product to satisfy demand and rents are increasing at double-digit rates, I also wouldn't be surprised to start seeing more and more conversions of things like vacant big box retail stores or vacant office campuses into an industrial use. In places like Los Angeles, metros around New York City in the tri-state area, and other markets that just don't have much available raw land for development, look for creative investors to repurpose existing vacant properties into an industrial use, especially in densely populated areas like Los Angeles, central and northern New Jersey, Boston, Miami, Orange County, and Philadelphia, all of which fell far below the average US vacancy rates in the second quarter of this year, and many of which currently have an industrial construction pipeline that represents less than 1% of their current existing inventory. And finally, aside from just looking at the fundamentals of supply and demand from a tenant and landlord perspective, as industrial continues to heat up and gains more and more attention and popularity from institutional capital, I also see competition among buyers in the industrial space continuing to increase, and with that, I think there's a very real possibility to see pricing continue to increase even if NOI values were to stay static, leading to cap rates actually declining for industrial deals in the near term. Some of the most prominent players in real estate private equity are making huge bets in the industrial sector, including Blackstone allocating 36% of their B-REIT portfolio to the industrial product type, and the company is continuing to expand their footprint in the space, and I just don't see that slowing down anytime soon. And with more buyers in the market and more institutions giving industrial their sign-off, This equals more bidders for the same amount of properties, and with many major private equity firms having lots of dry powder to deploy right now, I only see pricing getting even more competitive in industrial from here. So I hope this was helpful in giving you a pulse on the industrial market and the commercial real estate market as a whole. To put it bluntly, pricing is pretty crazy right now, but with the fundamentals actually backing a lot of these pricing decisions, it's hard to see how this changes in many markets anytime soon. And if you're looking to learn more about how to analyze industrial deals, or you're looking to land a job at an industrial focused real estate investment or brokerage firm, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to all Break Into CRE courses, including courses on industrial real estate investment analysis and valuation, sample industrial acquisition case studies, pre-built industrial acquisition and development models, and you'll also get access to members-only private email-based career coaching if you're looking to break into the commercial real estate industry and want some more personalized, guided feedback along the way. And if you like this video and want to see more videos like this on different real estate product types and the state of the market as a whole, make sure to hit the like button to let me know, and let me know in the comments where you see industrial going throughout the rest of 2021. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.